As I said, we've seen this movie before, and I almost always know how it ends. The electric vehicle hype train is still rolling, and NIO has been one of the latest stocks to see a major surge as it's had its longest win streak in 6 months. Is it still worth a buy at this point, or will it suffer the same fate as the others we have seen? Well, before we get into that answer, let me welcome you to my channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is crazy, it's chaotic, and I want to help you own it in order to achieve that financial freedom you're searching for. NIO Inc., ticker symbol NIO, is currently priced at $14.75 as of this recording, and it continues to smash record highs. It's another electric car company headquartered in Shanghai, China, and is the latest to be pushed into the EV spotlight. At the 2019 Shanghai Auto Show, it revealed its sedan coupe called the ET Preview Concept, but you may have heard about it after the NIO EV supercar EP9 set a lap record for electric cars at the highly astute Nürburgring racetrack in Germany. And while NIO only sells one electric SUV in China, actually more than 10,000 of them have been sold, the ET Preview Concept is a rather surprising proposition for the future. In Shanghai, almost everyone revealed some sort of electric SUV, but NIO went with a fastback sedan, and this is the one that they really want to compete with, like the Tesla Model S and the new Polestar 2. Now, as far as the stock is concerned, today trading volume blew the doors off of, well, everything, to the tune of 332 million shares traded as of this recording. Absolutely incredible. This made the stock the most actively traded stock in the market today. NIO is one of several companies in the EV space and has seen an incredible amount of hype in the wake of the huge run-up on Tesla, which, as we all know, has gone absolutely insane. But NIO has a few things going for it that many of the others don't. It's shipping vehicles, its sales are growing, and it has money in the bank. Or so they say, and we'll get to that in a minute, so make sure you're sticking around to the end of the video. Now, why is it that this is all of a sudden getting attention? After all, the stock has been pretty much straight trash for as long as I can remember, and I've certainly had my fair share of flipping this thing, but why now? Well, there's a few things to consider. The first thing, which I feel is the most obvious and probably not what most YouTubers are talking about, is for the short interest on this stock. The short volume ratio is over 25, which is quite a lot. We're talking Tesla territory as far as that is concerned, and well, I think it's safe to say that Elon is having his way with the short sellers at this point in time. If you haven't seen his recent dig at short sellers, it was quite hilarious. Tesla is, or I should say was, actually selling on its website a pair of red satin shorts, which was a dig at investors who shorted the company. Unfortunately, for any of you out there who would have been willing to shell out the $69 for a pair of the tiny Tesla gym shorts, they're already sold out. They were sold out within minutes, guys. Soon after announcing the shorts were on sale, Elon Musk tweeted, "Dang, we broke the website." Apparently they went fast, and I was seriously going to buy a pair to hang them on my wall after trying them on, of course. Don't you judge me. Hey, if I was going to pay $70 for them, the least I could have done was tried them on and posted them on the gram or something. But comment below if you actually were able to get your hands on one of these, because I'm curious to see how many people actually got one. Anyways, mix that short interest, though, on NIO stock in with this cloud of money that shifts from one EV stock to another, and you get the perfect short squeeze setup. After all, we've seen this movie before, right? I mean, let's look at Nikola, ticker symbol NKLA, which ran all the way to nearly $94 a share from $12 a share in a matter of weeks. Tortoise Acquisitions, ticker symbol SHLL, which took off from $10 a share and jumped nearly 350% in just days to be sitting about 50% from those highs now. Oh, and let's not forget the merger hasn't even happened yet. And then there's Workhorse, or WKHS, which went from $3 to $23 a share in days as well. And this one probably has the most promise so far, as it's already struck an EV deal with UPS and is pending another deal with the U.S. Post Office to sell fleets of their vehicles to them too. If that happens to Workhorse, I think the stock actually does explode. So the risk versus reward here, I think, is actually quite good. And so it was only a matter of time before it was NIO's turn, and it became the second most popular stock on Robinhood. And so is this the same story or isn't it? And is it worth buying up here at this price? Some of the positives to take away here is that NIO delivered 3,740 vehicles last month, bringing its second quarter numbers to 10,331 vehicles. This is a pretty big milestone as it's the first quarter ever that the Chinese car maker has exceeded 10,000 quarterly shipments, which is pretty damn good when they not only had a pandemic to deal with, but also Tesla, as they also crushed expectations in this quarter as well. Not only that, but the company's chief operating officer, Stephan, is very optimistic of meeting operational efficiency targets, and according to Clean Technica, he was quoted as saying, "We are pleased to deliver solid results driven by our competitive products, superior services, and expanding sales network. Our deliveries in the second quarter of 2020 exceeded the high end of our earlier projection, and we are confident that our goals on gross margin and operational efficiency will be achieved." Many analysts have been increasing their price targets on this thing, with the most bullish cases reaching around an upwards of $39 a share. And I mean, I can appreciate the optimism, but that is absolutely insane. $39 a share? That would bring the market cap to over that of Chipotle, Twitter, Ford, and many other established companies. This to me is where things start to become awfully familiar looking. And before I get to what I mean by that, if you are getting value out of this video and want more of Own the Chaos, click that join button, become part of the Chaos crew. Get some sweet badges, a daily watch list exclusive to the crew, and a weekly Q&A with me that's private to channel members. If that's something that interests you and you would like to help support this channel, I would love to see you there. Okay, so I'm not taking anything away from those sales numbers and all the optimism that NIO is reporting. Those statistics are fantastic, and the rate at which they are growing is incredible, and it's happening at the right place at the right time. But, yes, there's a but, there are causes for concern here. As I said, we've seen this movie before, and I almost always know how it ends. Here's a few things to consider. The first thing I will go back to here is the short interest. We see this all the time, right? The shorts get squeezed out eventually, and once all the buying and covering the shares dries up, everything comes crashing right back down. And to be fair, Tesla wasn't immune to this either. We saw Tesla climb from $500 a share all the way to nearly $1,000 in a week's time pre-pandemic, and then what happened? It came tumbling down 30% in the 2 days following those highs. Now, I'm not saying this will for sure happen with NIO, but understand that nothing goes straight up forever, and in most cases, the faster it climbs, the faster it falls back down to earth. So if you're in this thing, you really have to watch it like a hawk, set your stops, manage your risk, trim some as it rises. Whatever your strategy is, I hope you're doing it, because this won't last forever, in my opinion. Another huge red flag for me on this company is that the balance sheet from NIO is unaudited. As you can see from their latest report, it is disclosed as such. So we have a Chinese company that discloses unaudited financials that's risen 500% in 2 weeks. What could go wrong, right? Oh, how quickly we have forgotten about Luckin Coffee, another Chinese company who recently admitted they cooked the books and screwed over a ton of investors in the process. Ticker symbol LK was a supposed sprawling cafe empire said to eventually rival that of Starbucks, opening over 6,500 stores at an incredibly short period of time. The 3-year-old company, though, served up massive fraud in its accounting books, revealing that in April, it had exaggerated sales between the second and fourth quarters of 2019 by $310 million. Luckin fired their CEO and has recently given up their appeals to delist from the NASDAQ, meaning they will soon be traded over the counter. What was a well-liked stock that sat above $50 a share came crashing down to a mere $1.50 in light of this terrible news. No wonder lawmakers want to make it tougher on publicly traded Chinese stocks, right? Add all of these up, and that's still not the biggest concern I actually have for NIO. And it really doesn't even come close. The biggest concern I have for NIO is its competition and its ability to get any real stake in its market share. Its competition? Tesla, of course. Tesla just announced last week that it sold over 10,000 units in China alone, which could spell trouble for NIO too. Given that Tesla has better cars, their technology is leaps and bounds better, and Tesla has a boatload more money to keep soaking up the EV market, I just don't see how NIO makes it here in the long term. Unless the old People's Republic of China steps in and says, "Hey, not so fast, Elon," and limits Tesla sales in some way. It sounds crazy, but this is the Chinese government after all. And look, I'm not trying to say that NIO is in this same boat as all the other ones, and NIO could very likely continue to get squeezed up over the next several days. But in my opinion, the rug is going to get pulled at some point. be it from the insane buying finally coming to an end, an inevitable profit taking comes swiftly, and the Robinhood horde moves to the next one, or something comes out that maybe the numbers aren't as advertised or what have you, or most common an offering, which would sink the stock inevitably. I'm not telling you not to buy this thing, but what I'm saying is to just be careful. How many times do you have to see this play out before lessons are learned here? And I would love to hear your thoughts on this. Do you see NIO as something to hold on for the long term and think I'm crazy? Or have you already made your money and you are laughing all the way to the bank at this point? Leave me some comments and let me know. And if you haven't seen my latest video on where I think the stock market's headed and some stocks that are still worth buying up regardless, click this video here. Or if you happen to miss this video on how I find stocks to buy before the market even opens with a really easy, simple to use scanner, click that video there. And please like and subscribe. And as always, folks, I will see you all before the bell. And B. Smith is out.